guest. I'm joined by Nilesh Jain from Centrum Broking. He's the expert at technicals and derivatives at Centrum Broking. Welcome, Nilesh, and thank you so much for taking the time out for this discussion. Well, first up, your outlook on the markets. It's the last trading session for this series. How the series has panned out. What are the trends that we have to watch out for in the next series as well, and where do you see the expiry to take place?
Very good afternoon, Sakshi. Sakshi, this series has panned out very well. If you look at in the previous series where we saw some sort of a dip, and after that dip in this series so far, Nifty index has gained near 3.5%. And the important part is that it has also tested the lows of 16,080 levels, and we have seen roughly around 1,000-point rally from the lower levels. So that's a good sign. And so far, if you look at in last couple of trading sessions, we have witnessed a formation of a habit of formation. And now for the day, although we are witnessing some sort of a profit taking from the high levels, reason being there is a monthly FNO expiry today, and the data shows that 17,700, which still has the highest amount of open interest on the put side, and we haven't seen any meaningful unwinding from 17,700 put side. So we still need to wait and watch out for some sort of unwinding to happen in 17,700 strike. If that we see, then there will be some sort of a selling pressure, which seems likely in today's trading session, and Nifty met at 17,650 to 17,600 level. So for the day, we expect some sort of a consolidation and sideways move. And on the higher side, any decisive breakout above 17,800 will open further upside towards 18,100 to 18,300. But for that, we need to wait and watch out for some more consolidation to happen. On the other hand, if you look at the Bank Nifty, which is showing some sort of a strength and also sustaining above psychological support of 41,000. So watch out for 41,000. Till the time it doesn't break below the same, then we can expect a pullback to continue towards 41,600 and probably a new all-time high above 41,840.
Okay, understood that. So that's what you can expect as far as the Nifty index and the Bank Nifty index are concerned on a day like which is FNO expiry, more consolidation on cards as we move into the second half of the trading session as well. But Nilesh, the stocks and the sector that's in focus in today's trading session is clearly the metals pack that's leading the charts today. Talk about JSW Steel, Hindalco, Tata Steel, all of them up and buzzing in trade. Help us with the kind of trends you're spotting right there, the reasons why they are up, and which are the stocks that are coming on your radar too.
So Sakshi, we all know that historically we have seen there is an inverse relationship between the commodities and the and the dollar index. And now recently we have seen in last couple of trading sessions, the dollar index has pulled off after testing the highs of 114, and it has now come down to 109, near about those levels. So this recent decline has led to the rise in the commodity stock prices that we have seen in specifically the metal space that is showing some sort of a strength. And reason being, the value of the dollar influences the commodity prices mainly because of the dollar is the benchmark pricing mechanism for most of the commodities. And looking at the overall texture of the Nifty metal index, we believe that there could be possibility of further up move to continue going forward. Currently, Nifty metal index is trading at 5968 levels, roughly around 6,000 levels. And the previous all-time high levels is roughly around 6,800. So there is still more upside to continue that we can expect towards 6,300 to 6,400 going forward. The stock that we are liking from this space is firstly Jindal Steel and Power, that is JSPL, where we have seen earlier, we have already witnessed a good breakout from a falling trend line, and that counter seems to be heading towards 500 mark. So watch out for JSPL. Apart from that, Tata Steel, that is also looking positive for the upside target of 108 to 110 on immediate basis. One can keep a stop loss below 102 from a trading perspective.
Okay, understood that. Any thoughts on the stock like JSW Steel? That's the top mover today, 5% up in today's trading session. Any kind of targets that you can also talk about right here?
Right, so clearly JSW Steel is leading the pack, and if you look at the overall structure, all the metal stocks have this similar sort of structure, and specifically JSW Steel, if you look at the upside, is open for 690 to 700 sort of levels. And if somebody is already holding the long position, can continue to remain long with a trailing stop loss below 650. I would suggest better to avoid creating any sort of fresh long after 4 to 5% of gap up opening right now that we are witnessing. So wait for some sort of profit taking for fresh entry, and one can continue to remain long with the existing long positions.
Okay, now staying with the metals pack only, we've talked about JSPL, which is on your top radar, JSW Steel, which is the top gainer today. Both these stocks, you talk about JSPL, that's up 17% odd already in this year so far on a year-to-date basis. JSW Steel, if we talk about, that's now come in almost flat, the year-to-date levels as well. But there are some stocks from metal pack that have actually not performed, in this year as well. Talk about Nalco, Steel, all of them down almost 30 odd percent on a year-to-date basis as well. Also, Hindalco, it's down by 16% odd. Vedanta down by 12% odd this year. Anything that investors can look at a structural change in these kind of stocks? Perhaps this downside can actually be looked at as a buying opportunity?
Right. So two things. Firstly, the PSU metal stocks where we have seen a good amount of correction, and in fact, they haven't participated at all in this pullback that we have witnessed. So counters like Steel Authority specifically, where although we have witnessed a good breakout today, but I would rather go with Hindalco from this aluminum space, where I can see good upside potential towards 440 to 450 from the current level. So this particular counter can also be added at current level and on decline with a stop loss below 380 for the upside target of 440 to 450. Good, near about 10 to 12% upside can be seen. If somebody wants to play long side in Steel Authority, then keep a stop loss below 80 for upside target of 85 to 88 on a very short term time frame. But see, the idea is that if you want to stick to the metal space, stick to the large cap, stick to the private sector players, counters like JSPL, JSW Steel, and Tata Steel, rather than playing on PSU stocks.
Right, understood that. Now, let's move on to the mining sector, especially because one stock from that pack is really buzzing in trade today, and that's NMDC. After the news of separately listing its steel business and the stock trading, ex demerger, the stock shot up 15% odd, and up from those 52-week low levels as well. It was last trading at 107, 108 odd levels. Your thoughts on NMDC and what can investors really expect? Those who had to enter in this stock before it started to trade ex demerger, have they got more potential to tap onto this unlocking opportunity, or this is done for the day?
Well, first of all, we need to look at the structure of the NMDC counter. We have witnessed a good rebound from the levels of 100 up to the levels of 140, 138 to 140. And then the news came of demerger. Today, the gap down that we are witnessing is basically due to the demerger, that a separate entity will get listed of NMDC Steel. Now, NMDC Limited, after making the lows of 92.25, in fact, it has given a good reversal, good pullback of roughly around 15% from the lower levels, and that's a good gain that one might be enjoying right now. Looking at the overall structure, I think it is better to stick to this particular counter, and if we combine the valuation, that looks very attractive. And looking at the unlocking theme that is happening in NMDC steel business, so that is certainly likely to do well. Structure wise, I think 92, 93 is a good base formation that we have seen in NMDC. The upside is very much open for 115 to 120 again. So stay long with NMDC counter. I think there is a good potential from a short term to medium term perspective in this particular counter.
Right, understood that as well. There's one more sector that has become the hot topic of discussion these days, and that is the defense pack as well. Now, we do know that defense stocks have had a dream run this year, but the question is that whether defense PSU stocks can actually continue to outperform the market even going forward from here. Your take on this entire defense sector right here, what can investors expect? Is there a good opportunity for investors to create a portfolio with some select stocks from defense pack as well to tap onto the opportunity now?
Right, Sakshi. So if you look at the defense space being defensive, we have seen counters like HL, BDL, they have done quite well. In fact, we have seen a tremendous bull run in these two specific counter. And after making the lows near about 500 mark in the pandemic low that we have seen, and from those levels we have seen a secular uptrend. Now, currently, it is looking slightly overpriced at current level and in overbought territory as well at 2,500. But I would suggest to wait for some sort of a decline to get into this particular counter. Another approach could be to buy in a staggered manner, add on each and every decline. It is still looking positive from a next 1 year perspective target of roughly around 3,200 to 3,500. So there is still a good potential in HL. If you look at the BDL on the other hand, that stock can also deliver roughly around 30 to 40% going forward in next 1.5 year. So that stock can also be added on decline with a stop loss below 800. The upside target could be 1,300 to 1,400.
Okay. Also help me understand any thoughts on, say, Bharat Dynamics. There's also Mazagon Dock Shipbuilders, Cochin Shipyard, along with BEL and HAL, which are the more prominent players right there, that also have been, doing well. But anything from this that can you, if it interests you?
So, in fact, if you look at Cochin and Mazgaon Dock, both have delivered a good return. In fact, Cochin Shipyard have somehow the outperformer, and the structure looks very strong. Again, a similar sort of strategy can be deployed in Cochin as well, buy in a staggered manner. If somebody wants to make a fresh entry, wait for some sort of a decline on the back of profit booking, that seems very likely. So if the stocks, get correction near about 530 to 520, that could be a good entry level, and buy in a staggered manner for the upside target of 700 to 800 from a next 1.5 year perspective. On the other hand, Mazgaon Dock, in fact, it is also having a similar structure, but looks slightly overbought at current level. Wait for some decline towards the levels of 580 to 570. That could be a good entry level. And if somebody is already holding and already riding this momentum, that I would suggest to stay put. We can expect further momentum to continue going forward.
Okay, understood that. One more stock before I go on and understand your stock recommendations for the day, and that's from this new age listed companies, Nykaa I'm talking about. The stock recently slipped below its IPO price, and then, was the topic of discussion, because come November, we will also see the lock-in periods end for promoters, anchors as well, anchor investors as well. So help me now understand, the stock is again down by about 4% today, hovering near 1,060 odd levels. Your thoughts on Nykaa? Further downside from here, what should the existing investors do? New investors looking for an opportunity. Is this a stock that can make an interesting buy at this point?
I won't suggest doing any sort of bottom fishing in this particular counter as of now. Looking at the overall structure, that we have a limited data, and post listing in the year 2021 November, we have witnessed continuous decline. Any pullback that we saw meanwhile, that got sold into, and recently we have seen a structural breakdown from the levels of 1200. Now the structure wise target comes around roughly 950 to 900. So still we can expect 10% further downside from the current levels. So I won't advise catching falling knife in this particular counter.
Sure.
Better wait for further drop into the price. If it reaches the levels of 950 to 900, probably that would be the level where one can take a contra bet. But as of now, it is better to avoid. Those who have already bought in at a high level, there is no point exiting at a lowest level. There could be possibility of a pullback. If at all we see any meaningful pullback, that could be a good opportunity to exit from this stock, or maybe review. Then probably different stocks can be bought.
Okay, don't catch the falling knife. Any bounce can be used to exit Nykaa at this point in time. No clear, direction of whether the stock can actually go up substantially from the current levels as well. Before I let you go, Nilesh, your top recommendations for investors on the F&O expiry day.
Right. So basically, we are bullish on two stocks, specifically REC Limited. That particular counter posted good numbers recently, and today it has given a good breakout from its double bottom formation at 95. Currently, it is available at 96 rupees. The upside is open for 100 to 104 rupees, and the stop loss can be placed below 94. So that could be the first counter that can be bought. The another counter that we are liking is ABFRL. A good run up that we have already witnessed, and post that in last couple of months we are witnessing a sideways consolidation. Today we have witnessed early signs of breakout, and it looks like this particular counter is heading towards the levels of 355 to 360 in a short-term time frame. Stop loss should be placed below 330. So these are the two stock recommendations on the buy side from my side.
Okay, understood that. Well, thank you so much, Nilesh, for sharing with us your recommendations for all our viewers and sharing all the insights about markets and some specific sectors and stocks that we discussed today. Thanks a lot for being with us. All right, and then let's quickly look at how the markets are trading at this point in time. Up on both the indices at this point. Sensex up by 89 odd points at 59,632. The Nifty also up by 40 odd levels at 17,694 at this current level. Well, thank you so much for being with us on this show, and join us for the market updates that will continue to follow on Business Today TV. Thanks a lot for being with us.